So zero down mortgage is making a comeback. That's what we're told. But is this a good idea? Or is this kind of another, maybe the trigger of another disaster waiting to happen? How's this new zero down mortgage going to work? And what effect is this going to have on the housing market today? That's really the big question. As crazy as it sounds, the zero down mortgage is becoming a thing once again. I don't know about you, but I remember the crash a few years after the real estate boom of 04, 05. I remember what that felt like. Maybe you do too. You know, the days of as long as you could sign your name and you had a pulse, you could get a mortgage, oftentimes with no or a few docs down. No down payment. That just, you know, we all know how that ended. It didn't end well. So I guess one time, one try isn't good enough. Maybe we want to try that again. The reintroduction of the zero down mortgage. Is history about to repeat itself? I don't know. Let's talk about it. Although it sounds like a great idea for people with limited funds, to us who were around at that time, going through the real estate stuff, it's a really scary, sounds like a bad idea. Most of us would probably agree if we were in the real estate industry during that 08, 09 time period. I guess we'll just have to wait and kind of see how this one pans out. Zero down. So here's how United Wholesale Mortgage, the company proposing their 0% down mortgage program, will work. From what I can tell, it looks like a 97.3 mortgage. That basically just means the buyer is going to come in and they're going to borrow two loans. The lender is going to fund a 97% first mortgage, and then they're going to come behind it and fund a second mortgage. So the buyer is going to have a first and second mortgage. First one's going to be 97%. The second one's going to be 3%, making up the 100% financing. Remember, the reason why there's a down payment in the first place is to limit risk by default from the buyer maybe defaulting on the mortgage. Requiring 3% more or more down shows that the buyer has a little money invested, a little skin in the game, so to speak. So statistically, the less down payment, the easier it is for a buyer to walk. The more defaults you're getting more likely to see, especially if the market has a downturn like it did in 08. Prior to 2014, the minimum down payment from Freddie Mac and Fannie Mae, the two largest single-family residential mortgage loan funders in the U.S., was 5%. But in December 2014, both companies lowered it to 3%. Freddie Mac with their Home Possible program, Fannie Mae came in with their 3% down Home Ready mortgage program. You can look both those up online and get some information on those. Now we're going back to zero. How do you feel about zero down mortgages? Will this affect the housing industry? Positive, negative? Is this the answer to affordability in today's housing market? Is it a fake prop up to the economy? Is it too risky? What if the market breaks from the peak that we're currently on and turns down like it did before? Who knows? Do we just stop worrying about it and go for it? Because maybe it's the answer to all of our prayers. What are your thoughts? I'd like to hear about it in the comments below. Thanks for watching. My name's Troy Schuyler, licensed real estate broker in Roseburg, Oregon.